April has been a great month for SoFi. After dropping to only $15, the stock has rallied back hard, gaining 30% in just 3 weeks. But SoFi is scheduled to report quarterly earnings results next week on April 29th, and investors want to know if the stock is a buy before they announce those quarterly financial results. I'll answer that question in this video, give you my thoughts on the business and the valuation, and I'll also reveal and highlight the big things that investors should look out for from SoFi in their upcoming earnings release. The last time I covered SoFi on the channel was back here on April 5th, where I revealed to you a very bullish indicator and a sign that SoFi was about to move up. SoFi stock ran 20% in just 2 weeks immediately after this. So if you find any value in these videos, then remember to like and subscribe. And leave a comment. Tell me your thoughts about SoFi. So let's get straight into today's video. I want to start with the very latest news from the company and what this all means. This week, SoFi announced the launch of a new home equity line of credit, Experience rolling out to members offering the ability to access their home equity directly within the SoFi platform. SoFi have introduced its first real estate advisory council, convening top agents from top brokerages around the country. So what does this all mean for the majority of homeowners? Well, nearly 3/4 of homeowners plan to remain in their homes over the next 2 years, and many are turning to home equity to fund renovations and other major expenses. The home equity loans and HELOCs tap into home equity through lump sum loans or flexible lines of credit. SoFi can give members more flexibility at every stage of home ownership. More than 50 lenders from top real estate markets are partnering with SoFi to provide valuable market insights and input on product innovation. In addition to advising on trends and client needs, council members will serve as brand ambassadors, helping connect more buyers to SoFi's platform and extending exclusive benefits to their clients, including waiving origination fees and lender credits. According to Holly Meyer Lucas, SoFi is leading the industry by example, creating a culture of collaboration. By bringing industry leaders to the table in a meaningful way, SoFi is making the path to home ownership more attainable. Now, I've said it time and time again that SoFi's one-stop shop approach is their biggest asset. This allows and encourages a cross-selling model that drives so much value and sets SoFi apart from other tech platforms and traditional banking. When SoFi released their last earnings report, they showed incredible revenue growth of 40%, with adjusted EBITDA, net income, and EPS all improving year over year. Their membership growth is accelerating faster than ever, and new products even more so, again thanks to the cross-selling strategy. Adjusted net revenue, adjusted EBITDA, and adjusted net income are all at record levels and showing no sign of slowdown either. Yet the stock has dropped about 40% from its highs. Just look at how far this company has come. This is Q1 2021. This is SoFi 5 years ago. 7 consecutive quarters of accelerating year-over-year growth. Had SoFi sitting at 2.2 million members from just 700,000 in 2019. Now, this is something that many analysts, many retail investors, and many so-called experts said could not continue. Yes, they had 7 consecutive quarters of growth, but it was expected that this would slow down or even halt in a not too distant future. However, if we fast forward to today, that hasn't slowed down. That kind of growth is now added in just 1 quarter or 2 quarters. Like we just seen there, from 2019 to 2021, SoFi went from 700,000 up to 2.2 million. That's 1.5 million new members over the course of 2 years. In 2025 alone, SoFi added 3.5 million, nearly 3.6 million new members. And they added 1 million new members in the last quarter alone. And I expect SoFi will do similar again. I'm expecting them to triple beat yet again with the latest earnings report. Analysts are expecting revenue of 1.05 billion and EPS of 12 cents. I think this will be easily beat, and I'm expecting about 14 cents EPS. But what do analysts think of SoFi right now? It's no secret that analysts have been underestimating SoFi non-stop for years. Even when the stock was like $10, some analysts were giving targets like $4 or even $6, such as KDB and Wedbush. It's one of those things that I've come to expect over the past 3 years. No matter what price SoFi is, there will be analysts, the majority of them, that are giving targets that are actually lower than the stock price. But right now, the average analyst target is $24. Even after the recent stock price rally, this is still 34% above the current price. The high price target for SoFi is $38, while the lowest price target is just $17. This is only $1 below the current price. Now think about this. From 20 analysts covering the stock, only 3 have sell ratings, and the very lowest target that any of these are offering is only $1 below the current price, while the highest target is more than double the current price. I said it 3 weeks ago when the stock was $15, and I'll say it again today. This is the buying the dip that many of you were asking for. At $30, everyone was saying, I wish it was lower. I wish I could buy more at a lower price. And then we had the short seller report, which helped drive the price down during market uncertainty caused by the war in Iran. Everything was dropping. There was doom and gloom. This was the buying, the dip opportunity that everybody was asking for. And suddenly everyone panicked. In the space of the last 3 or 4 weeks, we've seen the market is crashing. It's the dot-com bubble all over again. Everything, sell everything, sell everything. Just suddenly new all-time highs. So many stocks are now at all-time highs again. Nvidia has run back to $208, pretty much its all-time high. Micron has just touched $500. These are stocks that less than a month ago we were being told we're going to crash, we're going to go down 50%, yet here we are. And Intel, for example, a perfect example of everyone panicking. Now, SoFi is starting to remind me of Intel stock back in 2025. Everywhere I looked on social media was the same story. Intel is dead. Their CPUs are trash compared to AMD. Intel is finished. They're going to go bankrupt. Same narrative repeated over and over. And analysts downgrading price targets despite Intel generating far more revenue than their rivals. Well, now Intel is up 300% in the past year. Their latest earnings report delivered a 10% revenue surprise and a whopping 2100% EPS surprise. Intel was written off. The believers had all vanished. They sold and missed out. SoFi right now makes me think of this. And as I said at the beginning of the video, SoFi is scheduled to report quarterly financial results next week on April 29th. And with SoFi stock still over 40% below its 52-week high, this might be one of the most important quarterly earnings report in the company's history. Now, although I touched on what we can expect in the earnings report in this video, if you would like to see a full earnings preview breakdown before April 29th, then make sure to let me know in the comments. I haven't made an earnings video for the last few reports, but if you follow this channel over the past 2 or 3 years, then you know my track record with these. But guys, what do you think? Will SoFi deliver their usual earnings beat? The current price is only $18. Is this a good buying opportunity before earnings, or do you think it will drop after earnings? Let me know in the comments and have a blessed day.